Bearish sentiment towards gold has reached historic lows. So what will 2016 have in store? Joining us today is Jim Wyckoff, Senior Technical Analyst for Kitco Metals, as part of our special 2016 Outlook edition. Jim, thanks so much for being back with us.
Hello, Danielle. Always nice to be with you.
So, Jim, gold's price has fallen roughly 45% since its all-time high around 1925 and 2011, yet bearish sentiment surrounds the metal. So the question is, will 2016 be the comeback year for the metal?
Daniela, I think that gold prices will stabilize in 2016, bottom out. We may have some more downside price pressure in the first quarter, but I suspect as we move into the summertime 2016, we're going to see stabilization in prices. And the reason I think so is that raw commodity sector leader crude oil in late 2015 has reached a nearly 7-year low, below $37 a barrel. The downside target for crude oil on a longer-term technical basis is around the 33 area. I suspect we'll reach that area in the coming few weeks or few months. Then I think crude oil prices will stabilize and start to trend sideways to higher. And when that happens, much of the raw commodity sector, including gold and silver, will do the same thing.
Now, Jim, the last time gold futures were this oversold on a monthly bar chart was back in the 97-2001 period. What could this tell us? Any hints as what may come?
Daniela, the fact that gold prices are technically oversold, the fact that sentiment among traders and investors is so extremely bearish, veteran traders will tell you that that's a sign that the lows are not far off. Everybody gets over to one side of the boat, and sentiment gets so bearish that the sellers become exhausted, and you see new buying creep in, and that's what puts in market bottoms. History shows that.
So what do you think could be gold's biggest threat in 2016, and what could be its biggest helper?
Danielle, I think the biggest threat for gold and the raw commodity sector in general is the specter of price deflation. We do see some worrisome signals coming out of the European Union, coming out of China about stagnant consumer and producer prices and slowing economic growth in those regions. That could stall commodity price inflation, which would be bearish for gold. There's nothing more bearish for the raw commodity sector than the specter of price deflation. So we'll have to watch that closely.
All right. Finally, Jim, just some key technical levels that you'll be eyeing for gold and silver.
Daniela, in 2016, I think the first quarter could see gold prices challenge $1,000 an ounce. That's a major psychological support level. Would not be surprised if we did hit that level to see prices dip just a bit below, but I don't see a strong downside potential below the $1,000 level in gold prices. Looking at silver, we could drop another $1 or $2 in the silver market before all this is said and done. And then on the upside for silver, I think you're going to have to get prices back above $16, $17 to improve that longer-term chart posture in the silver market to suggest that better times lie ahead.
Jim, thanks so much for your thoughts, and happy holidays.
Thank you, Danielle, and Happy New Year to you and all of our Kitco listeners and readers.
Thank you, Jim, and thank you for watching the special Outlook edition. We'll see you tomorrow.